Gold has been moving up very impulsively, especially over the past few weeks. This means that markets are switching to risk off, indicating that some sort of event could very easily happen that will take risk assets down. However, if you open Bitcoin's chart, what you will see is that price, at least until now, has failed to keep up with gold. Because as you know, it has been consolidating to the downside for over a month now. Does this mean that investors still see Bitcoin as a risk asset? And if so, is gold's signal of a potential upcoming Black Swan event extremely bad news for the Bitcoin chart? This is what I will talk about in this update. So, as you know, usually I love to focus on charts only. I give you trading levels, trading scenarios, and talk about trader psychology. However, in this update, I want to talk a bit more about fundamental factors and then I will relate everything to Bitcoin's chart. So, if we go back to gold's chart, why is it very important in my opinion? Well, very simply, what you have to understand about the gold market is that it is moved by very big and smart money. And by big and smart money, I'm talking about central banks, governments, and extremely wealthy individuals. And what you have to know is that those people have access to insider information. So if they're buying gold very aggressively and are pushing gold to new all time highs, this means that they are seeing something in the market that will take risk assets down. So this is an extremely important thing to note in my opinion and why we should keep an eye on the chart of gold. So again, what this is telling you is that big money is seeing something that will affect risk assets. However, in this case, we do also have another very interesting point. And that is, if you open the dollar chart, what you will see is that the dollar is going up along with gold. So if you don't know historically, usually gold and the dollar have an inverse correlation. So if gold is going up, the dollar will be going down, and if gold is going down, the dollar will usually be going up. However, this is not the case here. As you saw, gold was going up and the dollar is going up as well. So what is this telling you? What it's telling you is that investors at this point in time are only interested in buying gold and then they're simply holding on to dollars. They're not even interested in buying one of the safest assets in the world, which are bonds. In fact, if I open the chart of the 10-year treasury, what you will see is that yields have been going up very nicely and are sitting today at around 4.6%, which is very high. And as you know, when yields go up, it means that prices are going down. So investors are not even interested in buying one of the safest assets in the world at a yield of 4.6%. They're simply buying gold and holding on to dollars. So why would they be interested in buying Bitcoin at very expensive prices? And this is what I want you to be aware of, is that big money, at least at those prices, doesn't seem to be interested in Bitcoin. And how do I know that? Well, first, if they were buying Bitcoin here, you would have already seen a new all-time high. And second, if you go on the lower time frames, what you will see is that the way Bitcoin is behaving is you have a bounce and then you take the low of the bounce. So right here you have the low, bounce and then drop, again another bounce and you take the low, another bounce and you take the low once again. So the bids that are coming in on Bitcoin seem to be very short-term bids. It's not big money buying and trying to accumulate Bitcoin. It's simply financial institutions trading Bitcoin, making quick profits, so buying Bitcoin, quick profits, and then selling. Buying Bitcoin, quick profits, selling again. Buying Bitcoin, making quick profits, and selling it once again. So this is what seems to be happening on Bitcoin. Again, big money is not interested in buying and holding Bitcoin here. They're simply interested in making quick profits and then selling it instantly. So does this mean that big money is not interested in buying and holding Bitcoin because they see it as a risk asset? Well, I don't think that this is the case. Bitcoin has clearly taken a very important place in the financial system. Its market cap is well above $1 trillion, and we know that central banks and governments and wealthy individuals are eyeing Bitcoin. So, why are they not interested in Bitcoin here? Well, the answer could very simply be that Bitcoin is simply very expensive at those prices. Because again, they're not even buying cheap bonds with a return of 4.6%. So do you think that they will be buying Bitcoin right here? Well, I'm inclined to believe that no, they will not be buying Bitcoin right here. So if we relate all of this to the chart itself has not been affected at all, of course. The levels are still the same. So as I said before, below this level, we don't have much support on this uptrend. So if we do break it, we will probably see the low 50s. However, what this information has affected is the likelihood that we will see lower prices before we make a new all-time high. What do I mean by that? Well, as I said before, I didn't really believe that during this consolidation we would get a break below 60,000. However, my view on this has changed, and I do believe that actually right now, lower prices before we see new all-time highs are actually more likely. So overall, the levels on the chart have not changed really. As I said on the Discord, when we saw a break below the value area low right here, I said that this was a sign of weakness and we would probably break 60,000 again. And then I also said that the area to look at would be between 58,000 and 59,000. And as you see, Bitcoin has bottomed at least for now at 59,000. So overall, again, on the chart, not much has changed. What I want you to know and to be aware of is that if we do see lower prices on Bitcoin, you should be aware of what's happening with big money. Is that big money is not interested in buying Bitcoin here. And last thing that I want you to note is that as you know, the halving is happening this week. So I would expect a lot of volatility next week. And if we are to see the low 50s, I want to see a very sharp and quick move. So create a lot of panic. And in my opinion, if we do get such a move, it would be a very nice long opportunity. So overall in this update, this is what I wanted you to be aware of. If we do see lower prices, is that at least mentally you will be prepared for them. And hopefully you will not be afraid to open a long position if you have clear trading levels and a trading plan in place. Of course, this is the most important thing. But again, what I wanted to do with this update is show you why I do believe that after the halving, we will have very high volatility and then a move down is more likely than a move up. So this is it for this update. I hope you guys enjoyed it. And as always, if you have any questions, I'm available inside the Discord. So see you soon everyone and good luck.